Okay, you should be able to hear me now. So, okay, my forecast. So the way I trade is not really based off of projections of what the market's going to do or anything like that. I have a set criteria of rules. I look for a trend line. Once that trend line has broken, so long as there's direction on the day, either bullish or bearish, I look for an entry for a reversal. And on the ES, I'm using the 20 SMA. I use a very similar strategy with a different EMA on the NASDAQ that doesn't really work all that well on the ES. So instead, I switched to a slightly more common moving average to see how that performed. So far, I've got 36 data points. It's been the 37th and it's okay so far. I like to get to at least 60. It normally throws up around about 1.5 to 2 a day. So that would be probably, you're looking at 2 months worth. So I'll get 3 weeks, November, December, the past 3 weeks, January, February, and then we'll go back and do some other contracts as well. But this is essentially what it looks like. This one's a little bit scuffed because the trend line isn't ideal because of this weird wick pre-market on this day. But essentially what I look for is trend line, break of that trend line, clear direction, and then I have two different settings for if I'm going with the direction of the market or against the direction. So in this instance, this one obviously stops out. And then the way I collect all the data is I'm just doing it on another screen. I'm just putting it into Excel, and we'll then have a look and see how it performs. So yeah, and the cool thing about it is I don't really change anything that I do day to day. So like I'm not going, well, I changed one very small thing, but I would say 90% of what I do, I don't really care what the market's doing, so long as there's direction. I don't ever get caught up in like, oh, I'm bullish because of this, right? I just go, okay, the market's doing this today. Let's see if we get an opportunity for my edge to show up. And then if it does, I trade it. And if it doesn't, then I don't trade. On Friday, I got no trades, which was a shame. But day before that, I got a bunch. So, okay, let's see. This is probably the trend line that best represents price. We have 1, 2, 3. So this would have been the entry, so we wouldn't have got long on this one because we weren't out until we were up here. So we're not going to get that trade. We then have a pretty clean trend line here. Kind of comes back and screws with the trend line a bit too early, so we're going to adjust it to be here, which is still fine. It still represents price. 1, 2. Okay, so this would be a short. Oops, 0, 1. So yeah, it's you know, it's a sort of strategy which is very robotic. I mean, you can still make mistakes with it. I've made tons of mistakes with it in January. Actually, I made some adjustments based off of the mistakes I made, but it's not as sexy. I think is probably the best way of putting it. There's a lot of strategies out there where people are, identifying which way they think the market's going to move and then trade off of that. I I don't care that the strategy doesn't discriminate. The only times I change it is if we are in a bullish market. I will not take trades that are shorts when we're in bullish price action. So if we were a bullish market and we got a setup, trying to find one. If we got a setup, we'll find one at some point because this was technically a bullish market. But if I get a setup and we're bullish on the day and I then get a short up here, I don't take it. Just because the data was pretty horrible for that. So they become non-trades. see if this would have qualified. So this one probably would, to be fair. I think the big thing when I'm backtesting is anything that I 100% know is going to be a trade I take. And anything that I go maybe, like I'm 80% sure, I'll put it in, because it's better to put in data like that to then take it out rather than cherry pick. So I'm pretty sure this one turns into a loss, but I think if I was trading this in real life, I would probably take it. And this one's a loss, so yeah. What kind of strategy do you trade, cashier? Always interesting to know. One big thing I've learned in my trading career, and also, coach different people, is I've seen so many different strategies, and all of them tend to work. It comes down, or the vast majority work, it comes down more to the individual as to whether they execute them well enough. If you've got an edge in the market and you can show me you've got an edge, then it all comes down to performance and how accurate you are of trading. The best get that, and the ones who don't make it, they don't. Damn, this would have been a horrible day. It's the only thing that stops me from jumping into this strategy straight away, because my current strategy on the ES, I think the largest drawdown I've had at any point has been 7R, and that's in about 170 data points. Currently this is in 8R of drawdown, and it's not bad, if it continues to be, if it shows it's profitable. But the larger the drawdown, then the smaller risk size you want to take, because the risk of ruin is higher. And when that gets to a point where it's when there's a high risk of ruin, you take less size, you end up in a you can't be as aggressive and stuff. But yeah. Used to trade the 20 MA, it was not profitable. Like I said again, you've got to find a way to make it profitable. Like the the whole point of backtesting is not just to see if an edge straight away is profitable. It's more to go, okay, how can I collect 100 data points and then go through them and go, which ones didn't work? Why didn't they work? See if you can find patterns. So like, go through and you'll go, oh, you know what? I'm finding my strategy before 10 a.m. only works 20% of the time, so I'm not going to trade before 10 a.m. You remove all the trades from 10 a.m. and then you look what the stats are and you go, okay, it's improved it. And then you might go, the strategy seems to work really well when the market's trending is bullish. If you go on the bullish days, it's winning 55% of the time. On the bearish days, it's working 45% of the time, and on days where there's no direction, it works 25% of the time. So you go, okay, I'm going to get rid of the choppy days, not going to trade those at all. I'm going to, on the bullish days, I'm going to take 2% risk, and on the bearish days, I'm going to take 1% risk. And it's those little tweaks and refinements that if you find what criteria your edge works best in, then you become profitable. That's really the best thing you can really do. And sometimes you backtest and it's just, it just doesn't work on these, it just doesn't work, and then you have to really look into whether it's actually something you want to trade or not. But the big mistake a lot of people do is they simply jump in. They just go, oh, I've seen this guy trade like this on YouTube, I'm going to go trade this way, or I've read this is how this guy works, how this guy trades, and it looks good. And then they jump in and they try and trade it for like a few weeks, a month, and they don't journal properly. They keep going back and going, oh, I should have just traded here. I should have just done it here. I should have just done this. They kind of like, go back over charts and go, well, if I had just traded the strategy here and here, I'd have made money. And then at some point, they eventually go, I'm not making money doing this. I'm going to stop. And at that point, it's like, yeah, you probably, didn't actually know the edge inside out. And that's one of the reasons why you struggled. So I believe that this is one thing I've noticed because we had the FOMC day recently, is that I believe that this was FOMC on the 30th, and on these days, my personal edge on the Nasdaq doesn't work particularly well. So I am gonna kind of put an asterisk by these from the 30th and like these couple of days, purely because it's like, and it just goes back to what I was saying, if you notice that, in the 2 days leading up to and the 2 days after FOMC, my edge seems to disappear, don't trade those days. Just say, I'm gonna, watch the mayhem, or book a small vacation, or go and do something else, go play golf or whatever, and just sort of don't really worry about the market. It's another sort of thing that you need to do to be successful. So let's have a look. So this was on the December the 2nd. I'm just going to double check to see on December the 2nd whether it was a bullish day or not. It was still bullish. Okay. So that's not long enough. That isn't a trend. On these days, because it was a bullish direction, I'm not going to take this trade. It's part of the strategy. So it looks like there was no trade on this day. And now let's exit the replayer. And go back to where we were before, which was on the December the 6th. 11:37, December the 6th. Let's have a look and see if there are trades after that. So this was the 11:37 long, I'm assuming. Yeah, that would have been a long. So now we're looking to see if we can find any more trades. It's not the cleanest trend line in the world. It's a little bit annoying that there's something that I see. This is a potential area for a mistake, for example. So is this a trend line or not? At what point do you begin to say, this wick here, what the hell was this kind of thing? Did it actually even happen? Sometimes you get misprints on charts. So in a live day trading, these are the sort of questions that make you go, should I have taken this? Should I have not taken this? And that's where you begin to make mistakes. You can become emotional, even with a robotic strategy. So I think I would. If I just hide this sec. When we sort of zoom in, it's a little bit iffy. This candle's kind of weird. I'm almost tempted to say this probably wasn't actually a candle, but it may well have been. Just the rest of this price action looks like it was all such, so similar. But we'll put it in. And then was this above or below? Also, Kashi, yeah, Kashi. If you're still there, what is SMC? I've never heard of that terminology. I hate these trades. Whenever I get these trades in real life, I kind of know they're not going to work. Very, very bearish day looking for that reversal. This is actually part of my strategy that I'm looking into as the next refinement to see if on these days, when you have a very clear direction, if you should actually really take a trade. We had a very similar setup on Thursday on the NQ where it was a very, very bearish day. I'd already had a couple of really profitable short trades, and the next thing I knew, I was like, oh, we've got some long setups, which was cool. And then none of them worked, and it kind of made me go, I've seen this before. This never seems to pay out. So might be an area to smart money concepts. I'll look that up in a sec. Let's have a look. Is this that ICT guy? I have seen this kind of stuff before. I mean, I don't know anything about the strategy specifically, other than like, points of control, demand zone. Like, I have heard. Okay, yeah. So if it is the guy off of the ICT guy, I have, because I saw his stuff and was like, oh, this guy looks kind of interesting. Maybe maybe I'll have a look and see what he does. There's a lot of people trading it, and it's something you can apply to like Forex and I guess futures market. I did about half an hour of research and found multiple podcasts of people saying that he's a snake oil salesman, and their description of what he was doing lined up with exactly how I've seen other scams play out. Now, his approach may be profitable. The strategy that he uses and that he promotes may well be a very profitable strategy. I'm not saying it isn't, because I think you can. Honestly, I think you can make pretty much any approach profitable, and it makes sense, right? And that's where, for me personally, the worry comes in. If something makes sense in the markets, it probably doesn't actually work, because markets aren't logical. And what you'll typically find is that a lot of the people, the reason they lose is because they do things that they think make sense, buy things that are going up, sell things that are going down, and they don't realize that you have to kind of do the opposite to what makes sense. You have to find where the retail traders are losing. So take a retail strategy that loses a lot. People who buy breakouts typically don't do very well. The very, very best do. So what you do is you go, okay, why does this not work particularly well? Why do people who trade breakouts not perform very well? And it's normally because their entries suck. They get in too high. So what you could do is you could say, okay, I want to do the opposite to a breakout buyer. So I am going to wait for whatever it is to break out, wait for the push, watch the momentum and kind of feel the momentum really build. And when you get to the point where you go, fuck, maybe I should have bought this, that's the point where you go, as soon as I see the momentum starting to slow down, I'm going to enter short, because this is the point where all the people who are trying to trade it, are trying to trade a breakout, these are where the losers are getting in. So something that makes sense doesn't always work. That being said, like, I have no idea too much about the smart money concept. I see a huge amount of people trying to do it. They'll go back and they'll backtest with replay bars, and they'll identify order blocks and all of this. I don't know. I think the more complicated you make the market like that, the more likely you are to make a mistake. I try to keep things as simple as possible, and that way I'll figure out therefore the likelihood of making a mistake is lower. So yeah, so this day, Wednesday 7th, opened bearish according to my indicator. Would have got a trade up here, but it's a bit choppy. I'm not sure whether I would really look at this as a trade. I wouldn't. It came below the trend line. Even still, it did match price a little bit. Yeah, TX ICT too complicated for you. Yeah, I mean, I'll be honest. I watched a guy. I don't think it's just you. Look, I've seen people who try and like when you're trying to sell something in trading that works, you want to make it look impressive. You want to be like, oh, this is like the secret key. You need to know all these different things. And there's so many different elements. You see people who are backtesting, they speed through it all, and they've got like 50 lines on their chart, and they're like, oh, I've understood, and I'm seeing the market like a matrix. That isn't really how the best traders trade. The people who are making money, if you go on YouTube and look for the people who, like Matt Diamond is a fantastic scalper. The way he trades the market and his philosophy is like, I know that I have an edge when there is when there's a stock like Tesla. Like, he'll take Tesla for example. Let's look at Tesla. So he'll look at Tesla and he'll look on the daily chart, and he will just simply do some very basic technical analysis, and we'll go, we've broken out of this downtrend recently, and if we can, he'll look at this, on this day, say, he'll look at it and go, we've broken out of a downtrend, we pull back. If we get above this high of 136.50, there is a likely going to be a move to the upside. We've got a lot of shorts potentially trapped and people looking to get back in this. So he will look at that and go, this is a potential level for a breakout. And that's his potential edge. So then he'll go to that day. I don't know if we'll be able to go back that far on trading view. We should be able to. 136.50 was the level, wasn't it? So okay, so we've broken out that trend line, and then 136.50. So it's around here. Yeah. So he will have gone into this day here. This was on the 23rd, being like, we've broken out the trend line. We're bearish. If we continue higher, there is a strong possibility for a move. And he has very simple setups, which he has used the 2 minute, but we'll just look at the 1 minute because I'm not going to change around. And he will look at it and he will say, at what point do I think that there will be a potential break higher and momentum will come in? He'll put in the pre-market high. He'll have the, maybe the open price, and he will watch and he'll go, this goes red, sells off a little bit, it comes back. It holds this area, begins holding, moving average trend users, and then he will buy on this momentum candle, knowing that there is a higher probability that it will give him maybe a point in his direction before it pulls back. So he essentially says there is a potential edge here. He doesn't know which way it's going to go. He's big on saying he has no idea. He's just saying, I believe that even you can have an edge by saying there's a 50% chance of it going a point in my favor before it goes 50 cents against me. That's an edge. Then you just need to execute it. But yeah. let's have a look at this. So it's good strategy. I think there is, yeah, like some people need the complicated part of it, right? Some people some people need simplicity. I think that I think people typically will the people who have been successful, traditionally, or what was I on? ES 2022, maybe. Oops. If I can actually type. There we go. Yeah, the people I've seen become successful normally are not super intelligent, and they just got really good at executing a simple plan. And if you can achieve that, you're going to be ahead of like the 90% of people who trade. Okay, back to this back testing. No trade here. We haven't got any momentum, so I wouldn't be going long into this. I'd want it up here. And by the time we get up here, we've already tagged, so that's not a trade. We don't get any against trades, so there'll be no trade on Wednesday the 7th. Okay, so on the 8th, sell off. What time did this tag? 9:47. So one of the rules of my strategy is I don't trade before 10 a.m. Again, it was just something I found that didn't work out too well. I backtested and was like, hey, my win percentage before 10 a.m. is really low. Now, it was over a small sample, so it might not be too relevant. But here we go. This is a really clean setup. So clean downtrend that also reflects price. We come down here, we can take a second trend line. And we can see, we'll extend this out and try and keep it on the same gradient. We can see that it respects, some other points, so it's good. First tag of the moving average, we have direction. We've got a bullish move. We're also, towards the highs on the day, and we're not that close to the open price, so put that in there. And now we see, and this one was a loser. So far, you guys have probably watched me and been like, huh, this strategy looks pretty bad. All I've shown is losing trades. I agree. So far, it's been horrible on these days that we've looked at. Just the way it goes. My suspicion is that with this strategy, it's going to be one that, like, I know on the strategy on the Nasdaq, for whatever reason, this works incredibly well with the moving average that I have. On the ES, for whatever reason, when I tested it with the same one, it just performed horribly. And I was like, this doesn't really make sense. We've got two indexes, which, although they obviously are tied to different things, they're going to move somewhat similar. So the concept was that, oh, they should be kind of close. Not the case. Not the case so far, anyway. It still is profitable, just not as profitable as I'd like to take it into a live trading just yet. Yeah. Do you guys do any backtesting at all of your edges and collect data and have a look and see what it does, make adjustments to it, or just kind of try and trade and see what happens? Oh, is this a trade? Let's have a look. First tag's not when there's no direction. No direction here, and this might be a trade though. Let's have a look. Oh, hang on. I'm gonna say that there's no direction at this point. This would have been a winning trade, but there's no real direction. When you enter it, I mean, it's just kind of choppy. There's no clear direction. The next trend line is gonna be this. Breaks, tags, and I wouldn't take this because there's no direction. I would not extend to this because we've already kind of used this trend line, so that's a no trade, so no more trades on that day. Friday the 9th. No direction, We've got a bit of direction here, but there's no downtrends to break, so I wouldn't. And even though you've got like this, like, oh, this kind of looks like a trend line. Yeah, no, it doesn't. Doesn't reflect price, so no trade there. We do have this uptrend though. That is kind of interesting. It was on the 9th, and the 9th was, it opened bearish, so this would be a trade. Look at that. We have a winning trade. The other thing with this exact strategy is the risk rewards, the way that I trade it and the sizings that I use mean that it can go through some pretty rough times and come out very profitable still. And then it's just a case of understanding that when you trade it and accepting that there may be periods where you lose. You know, I would assume maybe like it can go as bad as like maybe negative 15R, but it actually only takes 3 winning trades to make that back, and we've historically gone on stretches of like 7 out of 9 trades are winners and made like huge amounts, so it's fine. I don't think we could really be in direction then. It's beyond 2 p.m. Okay. Monday the 12th. This is all a choppy mess. Now, let's see. Is this a trend line? I'm going to say this one is not a trend line. In real life, I may have considered this one, but I look at this and this doesn't really reflect price all that much. It was just chop, so I wouldn't take this. This one, it would have worked. The thing is, I've had many signals like this in recent trading that have not worked out, so I'm trying to say that's not a trade I'm taking and accepting that. This, however, this one probably would be a short, so we'll put this in. And I'll get to 50 trades and then I'll show you guys the I can actually put in the right date. I'll show you guys the results so far, because just looking at charts, not as fun. I'll also get up if you want my NASDAQ one as well, which is quite a bit better in terms of results. And they'll have a lot more screenshots as well. No downtrend there. And this is after 2 p.m. and the very first iteration of strategy, my friends and I said we're not going to trade it beyond 2 p.m. I've stuck with that and it's been fine. Probably could trade it after 2 p.m., but it gives us a defined cutoff point, so something I can test in the future. All right. Tuesday the 13th, we've got 1, 2, 3, 4 more trades, and then I've got a sample. Now this day, if I'm not too mistaken, was incredibly volatile. I actually remember trading this day being like, whoa, what is going on? So first trade, 944, not a trade. We have a really nice clean uptrend, 937, and it broke at 10. So this is only 23 minutes, so it's not actually a long enough of a trend. So I'm not actually going to include this one. I believe on the NASDAQ, this did actually give me a setup because I remember trading this, this kind of price action. So on this day, wouldn't have got a trade on that, which is a shame. Now we have quite an interesting element here. I say interesting. We break trend line once, not by enough. Then we break it again, not by enough. And at this point, I don't think that this is now a trend, because we can have a look and we can say, well, this is really a trend, and that's not a trend, that's a range. So this is one of those sort of like small things that I've seen in my own trading, that when I've made a mistake and look back at it, or when I've taken trade lists and it hasn't felt right, it's because I've gone, oh, I'm going to just extend the trend line out more and more and more. This doesn't actually, this actually does reflect price quite nicely, but it's not the trend. Like, this was the trend, it tried to break, and now it's just chopping. So this wouldn't be included. This here is probably a bit too flat to include, if I'm being completely honest. Again, I believe on the NASDAQ on this day, we got this next trade, so it did set up on the NASDAQ, but on this is way too flat of a, that's not a trend, it's a range. And this little thing here is too short, so wouldn't have got a trade on that. These days are painful when you have a big move and you just don't actually get a trigger and you can't do anything about it. So this is a good example. So like here, this is the trend line. We can move it once. We move it once. Now we've got a potential trigger. I'm going to hide this just for a moment. So we get a trigger. We break out. We don't retest the trend line. So this would be an entry here. Yeah, super volatile. This is the 13th. So on the 13th, was it bearish? Technically, it did open below. Okay. Oh, I was going to say, this is a winning trade, not a losing trade. TX, what do you trade? What's your strategy in a nutshell, or a brief description? Oh man. This is also the reason why I ES as well, okay. It's also the reason why I hate I don't this shows here a reason why I believe the Nasdaq is slightly easier to trade than ES. The moves, I don't know, the moves are slightly more exaggerated maybe on the Nasdaq, but 9 EMA harmonics. I'll have a look at that as well real quick. Brutal, another losing trade. It's funny, when I backtest like this, and I've got an idea, this isn't really an idea, it's more a trying to transfer a profitable, very profitable strategy actually, onto another ticker, another futures contract, and when it then doesn't work as well, I'm like, damn, this is really annoying. The emotion actually comes in even when just backtesting and getting data, which is funny. It's good because it can show, it can be an indicator as to how it feels in real life as well, I guess. Okay, so 9 EMA harmonics and M and W. This is the other thing as well. Like, the number of people who I speak to just on a day-to-day basis who give me a strategy I've never heard of before. Obviously, the 9 EMA I've heard of, but harmonics. Let's have a look. Harmonic patterns it's in the currency markets, but let's see. I mean, they can into larger waves that may predict price action. Ah, Fibonacci numbers. Put images in. Jeez. Okay. This the kind of thing? These kind of patterns. You wait for these sort of patterns, and when you identify one, you're bullish or you're bearish, that kind of stuff. And then M and W trading. Ah, so it's I see. So you're looking for like double bottoms. Yeah. No, I get that. So it's kind of it's essentially double bottoms and double tops. I get that. And then you're looking for the reversal. Nice. Yeah. Um, I would say that like with all of these kind of setups, the key I personally think is to have a really clear definition of what one is, because whenever you learn a new strategy, you'll immediately jump into the charts and go, oh, I can see it here. I've got a low here, and you know, and you'll see it there, and you'll see all the winning examples. So when you backtest, it's very, very easy to see all the winning trades, and then you don't see the losing trades because you're only looking for the winning trades. So no idea what stage you are in your trading. Like, you could be making millions of dollars and decided to jump onto a stream that has a couple of viewers. But based off of the fact that 90 to 95%, if not more, trades are not profitable, and 99 point something percent of people are not making millions, I'm going to make a shrewd assumption that you're not quite at that stage. The biggest problem people will have, thank you, I'll show you my Excel spreadsheet. Let me see. Oh, which screen? Maybe I've been sharing the wrong screen the whole time. We'll see. We'll bring up the whole thing in a minute. Can you imagine? Now I'm double second guessing myself. Am I? Oh. Now I've lost everything. Well, I say lost everything. I've lost my... That's also not what I meant to do. It's all gone wrong. Technology. Ah, there it is, down there. Oh no, it is that one. Yeah, I'll bring over my full spreadsheet soon. So, okay, so just started day trading. Okay. So the big thing I would say to anybody who's just started day trading, you have a strategy, you have a plan. Great. The very first thing you need to do is say, okay, how can I define this edge? And you might say, okay, I'm going to look for M's and W's, and it needs to be on a specific time frame. So you go, I'm only going to look for it on the 5-minute. I'm only going to look for it on the 15-minute. I'm only going to look for it in this specific market. So it might be like, okay, I'm gonna look for it on the 5-minute chart on the ES. Okay, it doesn't really matter. And then you also need to define what kind of you need to define your actual criteria for the trade. Like, trading rules, only apply trading rules to your strategy. Never apply it to your psychology. That doesn't work. So create some rules, then go out and collect 50 data points and try to be as specific as you can and look for winners. I think the best way to test a strategy, and the way I've done it, look for the losing trades. Make it your goal to disprove the strategy so you don't trade it in a live market. Once you've disproven it, you can, or once you've got the data, you then want to refine it. So you want to go through and you go, okay, where does it work? Where does it not work? And you want to probably have like 50 to 100 data points to do this. Get a very clear idea of the conditions it works in, the conditions it doesn't work in. Define those. Remove all of the trades that don't meet that criteria, and then continue to test and get another 30, 40 data points with that refined set of rules. Then look at the performance of the edge. I personally then I have an accuracy calculator which pretty much works out how accurate you need to be to make a minimum of 15 R per trade, um, or per day or per month. And if that's like incredibly high, it's like you don't have a very big edge. And I assume that I've made errors in my backtesting, so I provide like an 80% filter. So I'll say, okay, I've got 100 data points, my win percentage is at 50%, well, it's actually at 40% because I've probably included trades that shouldn't have been and missed some that weren't. And it gives me a more realistic side of the edge. And if I am spot on, then great, I'm working with a more accurate data set. Once you've got that, go and paper trade it. People hate paper trading. I don't care. You need to paper trade it, and paper trade in the manner not to make money, but to test mistakes. So you'll go, okay, the first 20 paper trades, there were 13 trades that I would look back at and say, I don't think they were spot on. So you traded at a 35% accuracy rate. That is really bad. I personally need to trade it. I think my actual edge that I trade, I need to trade only at like 66% to make enough profit. Most people's edge will be like 80%. So it will be, okay, I'm going to take 20 paper trades. When I've hit the 80% mark, I'm then going to trade real money with the smallest size possible. So you'd be saying, okay, I'm going to trade with 1 micro contract on the ES. Once you've done 20 of those, you go, okay, and this is if you're not doing a prop firm, which I'll go into a sec, but like you go, okay, 20 trades at 1 micro contract. If you hit that 16 out of 20 accuracy, 80% accuracy, then you move to 2 micros, 3 micros until you reach the desired size, essentially. If you're doing a prop firm challenge, throw all that out the window, paper trade it until you can prove you're successful with it, and then kind of work out the risk of ruin and kind of just go fucking huge, honestly, with the size. That's what I did. Just go huge. Try to get funded as quickly as possible. Once you're funded, go down to smaller size. So, but yeah, that's mini rant over, I suppose. Back to this to get a few more data points. So 13th was a disappointing day, but I know on the NASDAQ it would have been fine. Oh, I hate news events that happen at like, oh, it's at 2 p.m. That's fine. Okay. So on the 14th, was this bearish or bullish? Let's have a look. This opened above, so no shorts on this. No trades here. This would have been a no trade day. Actually, no, that's a lie. We would have got 1 trade. Oh, nice. Yeah, I'm enjoying Bullnix. I never traded with prop firms until like this year. I actually have I've had a few students who I coach on like trading performance, psychology, and all of that. And like so many of them were with prop firms. I was like, oh, that's interesting. And at first I was like, I don't really like the idea of of not being able to take all of the profit myself. And it kind of felt like a bit of a scam. I read more into it and was like, oh, hang on, this is actually kind of free money in a sense if you do it the right way. I've got the final episodes of that I'm gonna put up tomorrow. Well, I say final episode. I've got a second idea that I'm gonna kind of run with, and I'm not gonna put that up until I'm happy with it, because it's either going to blow up in my face in a really, really annoying way, or it's going to work very, very nicely, very quickly. And if that works, I'll share that, and it'll be sort of like my suggestion for how to use prop firms. My only concern is that, like, if it works, I'm assuming that if it works, the approach that I'm going to take, prop firms will encourage people to do it, because it makes it more likely that most people will below their accounts. But if it works, the people who are successful will make a lot of money. So yeah, it's kind of cool that way. Right, we've got this trade in here, which I would have got out of purely because it's before a news event, and I'm assuming that a 2 p.m. news event would be scheduled. I get out a minute before, so we wouldn't worry about that one too much. That was my 49th signal on this. I'm just going to cough a lot. My mom had COVID a few weeks ago, and I'm fairly certain, I say a few weeks ago, like a month ago, and I'm fairly certain I got it, just not as bad. But yeah. Oh, that's how you know about my spreadsheet. Yeah, prop firms. So like, the one thing I'd say is like, I wouldn't actually advise anybody to do the prop firm challenge until they've at least proven that they're profitable on paper. Just because it kind of makes no sense. If you can't make money in a real account, then what's the point of doing the challenge? And then use the prop firms in a way that is gonna be most beneficial. Right, so we get a long trade. This is gonna be the final couple of trades, and I'll show the statistics on my beautiful looking spreadsheet. Oh, she's fine now. She's fine. She 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 said that one night she woke up, wanted to go get a drink of water, and like collapsed because she hadn't eaten or drank anything all day. And then and I was like, yeah, that's probably something we should go get checked out. Checked out, which is fine. So and I actually went round today, and the first thing I said to her was like, "What are we having for dinner?" And she immediately was like, "Yeah, no, she's fine now." So thank you. And I got a free meal, which is, you know, however successful you become is always a benefit. Oh, I need to put this. I need to actually write the trade in rather than just take a screenshot of it. And this was above. Did it open up above? $15th. Yeah, it did open above. Okay. Okay. $10.22. We're almost since I went on when I began streaming, the strategy has managed to go through a period. It went on a negative 10R drawdown. Now it's back to only being down 2R, and I believe that this trade I'm going to put in now, it looks like it's going to work, although it might not actually meet the criteria. Wait, where did we get out of this one? There. Oh no. Did we get a trigger here before? 1, 2, 3. No, we didn't. Okay. And again, like I'm not. This wouldn't be a trade anyway. Okay. So I'll pause it there because I've got 50 trading examples. So here is the spreadsheet for the ES. I haven't included screenshots on this one yet because it would like just double the amount of time I want to get the data out. So I've got 50 data points. The rules fine. So let's have a look at the results. I haven't looked at these yet. So okay. So we've had 50 or 27. Actually, is this the right code? Yeah. 27 days have been tested. 50 total trades. There's going to be a couple more on this last day that we're looking at now. The overall win percentage is at 48%. The thing that's super surprising for me is that the win percentage is actually split differently to my NASDAQ strategy, which is strange. Very strange. But the overall profit on those 50 trades is about 38R. I kind of based off like if these results remain the same, I would actually change around a little bit how I would distribute the risk. But yeah, it's saying that the expected return is around about 31R in a month, which isn't too bad. I think that these results are fairly accurate. I'm not going to apply the 80% necessarily to do this, but if they are, it's still around about 20R. So yeah, I'll open up my, here's the equity curve. I mean, it looks pretty flat because it's set for 200. So yeah, not too bad. Not too bad. This is scary. The last 20 trades have performed really badly. That'd be a horrible stretch to be in. I'll open up my NASDAQ one because that's a little bit more. There we go. A little bit more inspiring. So this is my most up-to-date NQ strategy spreadsheet. This is the one that obviously you've seen in the thing in the videos. It's yeah, is what it is. I've added quite a few things to it recently just to gauge how the edge performs. In terms of results, this one's doing really well. Like, I'm very confident as well that the trades are that there's a high degree of accuracy. This feels wrong. No, it's right. Yeah, there's a high degree of accuracy because a lot of these I've either taken as trades or reviewed them back. Oh, I know why it's slow. It was this. Yeah, okay, that makes sense now. Yeah, this is a few refinements on. So yeah, so the current strategy I'm trading, this is the exact strategy. I would say this is like 97% accurate, 95% accurate. 130 trades. Total adjusted profits 175R, which is nice. Doesn't mean I'm going to make that, obviously, because then it comes down to performance. This is the current equity curve, which is looking... Let's turn this... Fine. Which is, you know, I like how the line is pretty consistent. There's not big drawdowns, which was a big thing with my funded account. And then I've added these, which are like rolling trade averages. So it takes the last 50 trades, the average return of those 50 trades, and it's over 20 trades. And what I was noticing in the last refinement, and this is what I'm talking about, like how you refine an edge, is this was looking great. I was getting very worried. This is like I've changed the strategy based off of this. I was getting very worried that the performance was the edge was getting worse. It was kind of disappearing almost. We were down to like, you know, the previous 20 trades we were averaging down like 10 to 15R in 20 trades, and that's still really good. Like, if you told me now like I could have a strategy that made 10R every 20 trades, I would take that for the rest of my life. Like, that would be huge. I didn't like that it was downtrending as much as it is, because that suggests that what we were doing was becoming less efficient and was possibly going to at some point disappear or go negative, which would be horrible. So because of this, because of seeing these, I began to go, okay, there's a problem here. And because I had all the data, I began looking at it. And the thing that jumped out immediately to me was one of my types of trades wasn't performing well. They were actually losing over quite a decent period. This was about 3 weeks, I think. So because of that, I was able to go through, figure out what it was, change that. And once I changed that, those graphs that were heading down have been just barcoding, which is what I want. I want my edge to be barcoding. This is since trading live, so this is like the most accurate data. I want it to be flat, because the flatter this is, the more reliable it is, the smaller swings there are. I don't really want to see it like ascending, because that means that I'm probably making well, you could see it ascending because you're making adjustments as you go along, but for the most part I want to see it flat. And this has been consistently holding around the I mean the average I think is like 27R in 20 trades, which is awesome. So, and this is the exact same strategy. I mean, I'll show you some of the screenshots real quick. This is the exact same strategy. You wait for a trend line to break and then you go long. You wait for a trend line to break and then you go long. You wait for a trend line to break and then you go long. This one I haven't actually put the correct trend line in, but there was a trend line, another trend line. Trend line in, you go long. Trend line in, you go long. Trend line in, you go long. Trend line in, you go short. It's the exact same strategy. It's just using a slightly different moving average on the Nasdaq, and you know, it's just a case of executing it. So it's the same thing as what I'm doing right now on the ES. The difference is I'm using a different moving average, and so far, being completely honest, I'm slightly disappointed with the returns of it, because it's you know, the other one was at like 1.4R per trade. This is at 0.7. I haven't got that many trades with. I need another 50 really to have a slightly more reliable data set. But yeah, that's about it really. Uh, Not much more. Let me just get this back up here. Not much really else going on. Probably going to finish it there. Thanks, TX, for dropping by, and Cashew for dropping by. I think you both left. That's fine. Appreciate you hanging around. Love doing this. Oh, you're still here, TX. Sweet. Yeah, I'll probably do this again at some point. It's just fun to do it and talk rather than just do it and slowly bore myself to death. Thank you. I may well put my trading journal up somewhere because it's like I released a course on like how to go from having a rough idea of what an edge is to being profitable. And that journey was kind of the journey I went on before I did the Bullnox challenge. So like in that course, it's like the cool thing was I made it, then did it myself and was like, yeah, this definitely like this. I mean, other things I'd done in the past have worked as well, but this specific course, like I was like, I'm gonna make a course and then I'm gonna stick to exactly the steps. Did it step by step, and then did the Bullnox thing, and yeah, it's gone well so far. And in there, I do include the trading journal. It's like I said, it has been up. Like I've added things like this like working out the 20 and 50 average trades and everything. I added that in more to track the edge more than anything else. So I might make an updated version, put it on there, or I might just put up the updated version somewhere anyway. But yeah, if you like, follow me on Twitter. I'll show you my Twitter account real quick. And I hope you're enjoying the series. I'll release the 5th episode either tonight, or for me tonight, tomorrow if you're in the States. And yeah, it's the final one in that first part where it's like, hey, I got funded. Look at me, just like many others. But yeah, if you wanna follow me on Twitter, send me a DM. And yeah, I would love to get into like full time coaching. Not because I don't coach strategies or anything like that. It's purely a case of like looking at somebody and going, yeah, the fifth is coming. It's gonna be good. It's a good like conclusion. And then, like I said, if this new thing that I may do, if it works out, episodes 6 and 7 are gonna be very fun. So yeah, but yeah, like I've coached about 8, 9 people now. Every single one of them has said it's benefited them. A lot of it's been for free. The way I coach is I don't care what you trade. All I'm trying to do is say, how are you going? What mistakes are you making, and why are you making them, and how we can resolve those, and kind of create a plan for someone to actually follow. And the guys who have done that and actually gone ahead and started to follow the plan they've all come back to me. And there was one guy who I worked with who improved his profit by like 80% or something like that. And it was just by stop doing the dumb things, right? Because I see so often. I bet if I go onto my Twitter feed right now, actually, that people will say stuff like, okay. There's going to be someone. There's going to be someone who said, this is cool. There's going to be somebody who... This is very true. This is very true. Good trading is boring. Bad trading is exciting. 100%. This is probably the best tweet this guy's ever put out. Lost my whole account in that ICT call. Thanks a lot. Oh, there you go. There you go. God, I hate these sort of tweets. But there will be somebody who will say, you've just got to be disciplined. Here's the thing. You cannot just be disciplined because you, like, let's say someone struggles with FOMO, right? Fear of missing out. You cannot just say, I'm not going to give in to FOMO today. You can't, because you are going, because that, what triggers the FOMO is something internal, right? And you've got to figure out what that actually is. And most people won't be able to do that on their own. You need to kind of have someone else look through your trades with you. And every time you go, okay, why did you take this trade? And listen, and I would then listen to the person go, oh, well, I took this trade because of this, this, and this. And after about 4 or 5 mistakes, normally I'll say, okay, we can stop there, because it's pretty obvious that you're constantly doing your underlying thought process is, oh, I can't miss the move. Everything's ripping. The market was ripping, so I needed to find a long, or whatever it is. There'll be an underlying thought process. Once we've latched onto that underlying thought process, you then attack that. You don't attack the FOMO, because you can't just be like, oh, I'm not going to give in to FOMO now. You have to go, what is the underlying thought? Funny thing, I don't know if any of you guys have heard of Jared Tendler and his book, The Mental Game of Trading. I'm actually in that book. I've got the book somewhere down there. I'm in the last or second to last chapter. They refer to a guy called Nick in the UK who is, I can't remember what even it was about, because originally it was about anger and then it was more about dreaming. But yeah, I'm in that book. I worked with Jared. He taught me a huge amount about how to actually fix mental game issues. And from that, I think it completely changed the way I looked at trading in general, right? I stopped looking at it as how can I find the best strategy? And it became, how can I make sure I'm executing at my best day after day? How can I catch the times that I'm giving into, whether it was FOMO or whatever? How can I identify the thought processes? How can I, see when I am, where are the red flags, right? So like, oh, when I begin getting angry, I think this. When I feel FOMO, I begin thinking this, and latch onto those exact thoughts, and have a strategy of that. Kind of off topic, but that's kind of what I do. So yeah, if you're ever having any struggles, TX, then send me a message on Twitter. I'll do free coaching. I would say wait until you've got some like hardcore data of like, okay, these are my last 40 trades. I made some mistakes on 25 of them. Great, we go through those, we figure out what it is. But I've had people ask for coaching and they said they've got no journaling. That's all right. I've had people say, oh, I haven't journaled any of my trades. And I'm like, okay, what are we gonna be able to do? But yeah, I'm gonna head off because it's almost 1 a.m. UK time, and I've got things I do tomorrow, fun things, which involves me driving to an airport and then driving halfway back and then getting picked up from where I end up, as you do. But yeah, thanks for watching, guys. I hope you enjoyed that, and maybe I'll do these more often, just a bit of fun.